Good morning, investors. So, today I wanted to talk to you guys about reading books. No, not those kind of books. I'm talking about order books. But first, a message from our sponsor.
At FN Chart, we believe in putting facts in context. To achieve this in financial markets, we've created a platform that aggregates financial news, combines it with user-generated discussion and voting, and maps it onto a stock chart. So next time you're looking at your stocks chart and asking yourself, what happened? Just check the FN chart. When you first check the FN chart, you will be presented with our sentiment discovery dashboard. Here you can get a bird's eye view of what the sentiment is in the market. You can view which tickers and headlines or posts are trending, what the latest headlines and posts are, and you can also see your own custom feed of posts and comments by other FN Chart users you follow. Once you click on any post or ticker, you will be taken to that stock's chart and context. Here you can view the news and discussion for the current day's price movement. If you want to know what happened on any day in the past, just click on that day on the chart and the context sidebar will load the news and discussion that was posted that day and earlier. Once you have pulled up the day that you are interested in, you can vote on what in your view is the most relevant that day, contribute to user discussion with your own comments, or you can submit your own link and text posts with analysis about this stock. That pretty much covers the basics. For more tips and tricks on what you can do with the FN chart, head over to our YouTube channel. So next time you're looking at your stocks chart and asking yourself, what happened? Just check the FN chart.
I had a few people write in to me with the same question, and I wanted to address it in this video for the benefit of anyone who wasn't brave enough to ask. Also, if you want to see a video on a topic that you're interested in, just write to me on Twitter. You can find me under the name Top Step Local, which you can find in the channel description. The question was, hey Plunger, I found you through a thread reply and then found your YouTube. I've been learning technical analysis and I think I have a setup that works, but I'm still losing money because a lot of times the price just goes right through my stop and turns around and goes in the direction of my trade. Can reading the DOM help me avoid getting stopped out? The answer is a resounding yes. Now, before we get into it, I'm going to be doing this completely for free and I'll never ask you guys for money. All I ask is that you help me reach and help more people. So please hit the like button on this video right now. And if you don't want to miss future videos, please subscribe right now and hit the bell icon for good measure. So at some point a while ago, I found a recurring pattern or setup in the charts of a few stocks. I then tried to backtest this strategy manually to determine what the expectancy of the particular setup would be. While doing this, I noticed one of three things would happen. One, more than 50% of the time, the price will turn around in my general zone that I identified and go in the direction that I predicted, which is great because that means it's got a decent shot of working as far as a strategy goes. Number two, a lot of times the stock price will just go far enough through my zone to hit my stop before turning around and going in the direction that I predicted without me on board, taking me out for a full loss. And number three, the other times the price will just blast through my zone that I identify like there's nothing there, taking me out for a full loss and then just keep going. Now, after having done the manual backtesting and having seen these three scenarios play out in front of me countless times, I began to think, I wish there was a way for me to tell if the stock's price is likely to hit the stop that I had set before I enter the position. This way, if the stock price does turn around, I can still be on board for the actual move that I predicted. And if it doesn't, then I can avoid the trade altogether and not be taken out for a loss on a trade that would never have worked in the first place. Well, guess what? There is a way. Now, before we keep going, I mentioned a few terms such as strategy or setup, backtesting, and expectancy. If you want to see a video explaining one or more of those terms, please let me know in the comments, and I will prioritize the videos based on how many people ask for which terms. In my example, I'm going to show you the US Treasuries market because it moves much slower than stocks and is generally more clear when reading it. It also makes it much easier to show you certain behavior. However, the same techniques do apply to any market and any instrument, as long as the instrument you're trading has enough liquidity. In other words, if you're looking for this to work on something that trades 1,000 shares a day, then you're going to have a rough time making any sense of anything. So what do we see on the screen here? Let's just take it one step at a time. What we see on the screen is a chart, which is here, and this chart shows us the 10-year Treasury notes on the Chicago Mercantile Exchange. It's the futures. Up here, we see the news that are coming out today in Pacific Standard Time. So at 5:30 Pacific Time, we will receive preliminary GDP, unemployment claims, and price index quarter over quarter. At 7:30, natural gas storage, and at 8, crude oil inventories. This just prepares us for key moments in the day when there's going to be potentially a lot of activity. Then, if we move to the right of that, here, this is the actual price ladder or order book for the 10-year treasuries, the chart of which we see on the left here. If we keep moving to the right, we notice that here we see the 30-year US Treasuries. And further on, we see the 5-year Treasuries. And finally, we see the Ultra Bond. All of these order books are somewhat correlated. And in the case of the Treasuries, we can actually use them to give us a hint of what may come in the 10-year, or in some cases, we can at least get some confirmation that it is indeed a real move that we are seeing in the 10-year. However, we can also ignore the rest of these and just focus really on the chart and the 10-year Treasury order book here. If you want to follow along on your own chart, this action takes place on February 23rd in 2023. So let's imagine a scenario where we had done our research on the chart and have identified a zone where we want to be involved. Let's say that zone is centered around a high of 111 and 1.5 as a high, and a low of around 110 and 30. If we imagine that, we can then imagine an entry around 111 and 3 and an exit at around 110 and 29. Now, if we were to do this the old way with the set and forget method, we would see that on this particular day, we would have been entered into the position, but then we would have also been kicked out of the position when the move actually goes through our stop. The move then turns around, reverses, and ends up actually going in the direction that we're predicting, which is up. Let's fast forward a little bit later in the day and we'll see that this is actually the case. As we can see here, we did indeed break through our stop and then reverse and go right in the direction that we had originally planned. And if we recall, our stop was set at 29, which is right around here. And our entry was set around 3, which is right around there. So it's an exact perfect representation of what we're talking about in this video, of price going into our entry and then through our stop, kicking us out, reversing and going in the direction that we initially planned. So now, how would we approach this in the new way? To do that, let's go back to where we started and look at it one step at a time. Now let's look at this from an active entry perspective as opposed to a set and forget passive entry that we looked at previously. The things that we want to look at if we're approaching this from an active perspective is we want to look for pressure. We want to look for pressure going down, and we want to look for areas where we establish a little bit of volume on this volume profile on the way down. And then we want to watch how the price behaves when we come back to those temporary high volume nodes, or HVNs for short. We also want to note that we're starting with a low of 111 even. And so this we should expect to act as an important pivot. But we want to see how price behaves when it approaches this pivot on the way back up. And so let's get to it. Now, before we get started, I just want to mention one other thing. In this review, I'm not going to be looking at the other correlated markets and how they behave at the same time as the 10-year. If we were to do that, we would notice that these markets would have given away the direction that we will go and the pressure ahead of this market. So effectively, they would have tipped their hand on which direction we're going to go in and when before the 10-year. Now, if you guys want to see how I would look at this trade from a correlated markets perspective, leave a message for me in the comments and let me know that you want to see a video on that. And I would probably do a separate video on that because it would make this one a little bit too long to go through those. Now, with that out of the way, let's get to the replay. Now, before we get started, I want you to pay attention to a few key levels on the way down as well as on the way back up, maybe even more importantly on the way back up, in fact. Those levels are, as I mark them up, as I mentioned earlier, 111 even, but also pay attention to this area here of 28, 28 half. Those are going to be the key areas that we want to pay attention to. Now, you may be asking yourself, where did I get these levels from? And so I just want to take a second to just go through where those came from, just so that it's really clear. And so let's just do that now. What I'm going to do is I'm going to fast forward to a few areas. Where I got them was, well, first and foremost, the 111 even is just the low for the overnight session, and it's the low that maintained up until the uh, news came out, the 5:30 news. The other levels came from when the price broke through the low of this current overnight here and continued to move down to around 28.5, where if you pay attention, you'll notice that we did a significant amount more volume than in the area between 111 even and 28 half, 28. And then we would proceed down to 25 half, 25 even area, where that was just the bottom of the overall move. But that's where it comes from. So if we actually just go ahead and skip ahead, we can see when that happens right around here. That's when the news comes out. And if we fast forward, we can see when we get to 28 half, we can see we also did a little bit of volume at 30, and then we end up doing a bit of volume at 28 half. I'm just going to skip forward when we reach to the very bottom, and then I'll just highlight the areas that I really paid attention to and that end up actually being important. So here we go. We reach the bottom. We hit bottom. You know, where's the bottom in these moves? We don't know. I don't even try to guess and predict where that is. I wait for the market to tell me. And the way I do that is by taking a look at these levels that we passed and built up some volume. I can see these levels, and of course the pivot up here, which was the low. And so effectively we end up with this kind of picture where we have these levels that we are paying attention to. And really the important ones are 25 half, 28 half, 28 even, and 111 even. 30, maybe a little bit, but you know, you can see 11,300 plus contracts traded at 28 half, 7,200 at 28 even. You know, the other areas aren't even close to that volume. So clearly there was a battle in this spot. And so if there was a battle here, then there will be one again. And so we want to pay attention to these areas. And that's where I got those from. I hope that's clear. If it's not, please leave a message in the comments. I will be responding. I'm actually going to fast forward through this just to those key moments as well, just to keep the video length to a minimum. And if you guys want to see the actual action, you can bring up this video on my channel where it's posted in full, and you can see the whole day's action from beginning, in fact, from before the regular trading session starts all the way to the end. So what I'm going to do is I'm actually going to skip forward to around 5:30 on the clock, which you can see here. I'm going to skip forward to 5:30, which is when the news comes out, and that's when we see a lot of volume coming into the market and a lot of activity that pushes price around. So the news comes out, And we see the market moving up initially all the way up to 3.5, which is another important area to pay attention to up here. We broke through the level we were looking at initially here, and we're now approaching the area where we want to pay attention here. The market's moving so fast that the DOM is moving with it. So again, this is a key area here. Key area here. And for much later in the day, a key area there. Now in this video, I'm not going to get into the details of in-depth analysis of the order book with the bids and offers and how they come into play with the actual trades that happen in between. All I want you guys to do is to just pay attention for the overall waves of buying pressure and selling pressure, and I want you to see how easily price moves through levels and on what kind of volume. So we can see on the way down, we traded 1690 here, 7,200 in total. And then we moved through these levels with 500, 900, 1,000, 500. And we seem to have gotten stuck at around this level here. Now let's see what happens when we're at 28.5. And I would call that our first pivot, in fact. And potentially our first entry location. Because effectively we would be limiting our risk, but I would say we could have waited and actually confirmed that. So if you notice, we're already spending a lot of time up in this area and no time down here retesting that area. And we can see we're actually now trading 28.5 and we just went bid 28.5. This would have been a moment where we could have entered along and we would have been fairly safe. But the best moment is actually coming up for that particular entry location. You can see we are seeing a lot of buy orders, not that many selling orders. We can see this one bouncing down and back up. Again, I'm not going to go into the details of analysis of how the bids and offers come and go and refresh and all of that. Just look at the pressure. With every selling wave, there is a wave of buying with bigger volume. Now we've cracked this level. We're now in this other area here. At this point in time, you could have fairly safely placed an order anywhere 28 half to 29 half. And the key is the whole time we're controlling our downside and we're staying with the pressure. And the pressure is clearly on the long side. Now, we end up spending quite a bit of time in this area up here. And if we look at the volume profile, we see that we're starting to develop a nice bell curve with a point of control at around 28 half to 28. And we have a low volume area at around 111 even, 31 half, and 31. In fact, let me adjust my colors markups. And actually, let's just take a moment and speed this up. So we've got a pivot around there, and we've got another one around here, and this was the low that we actually never end up seeing again. So keep these areas in mind. I'm just going to fast forward a little bit in the video through the action, just because what I want to do in this video is I really want to draw your attention to the waves of buying versus the waves of selling, just as a way to read pressure. But there's definitely a lot of interesting action, and I highly encourage anybody seeing this video to go to my channel and actually play the full trading day session recording. It's 2023-02-23-0500. So we made it all the way up to 111 even. And now we have a wave coming back down towards 28 half and 28 even. I really want to continue watching this, but I'm just going to fast forward a bit. So if we do fast forward, we can see that this wave is a down wave into the 28 half, but we bounce, still pushing down. Pressure is still selling pressure. now we have another wave of buying pressure, and we're back up towards the top of that range with 31, 1 even, 111 even, 31 half, 28 half, 28. Those are our areas again. We can see we still have significant buying pressure, but they're just not able to crack that level. The key thing that we may be concerned with here is that we may be just confirming that this is in fact going to be the pivot for the day, and that we'll have a continuation down move through the low of the day at 25 half. And so if you're on the conservative side, our entry, let's not forget, would have been originally at around 3 over here. So if we make an entry anywhere under that, we're already looking good, especially if we're doing that while minimizing risk. So if we keep watching, we are seeing continuing buying pressure, now starting to ebb a little bit, and we're starting to see some let up on buying, and some sellers are starting to come in. We just saw 1,000 hit into 30 even and move price down, and then the offer stacked up right away, and then the bid moved away on very little volume. Same here, and now we see a refreshing bid at 29 even, and it's gone. Offers not really stacking up. Taken out 268. There was 300 there. $200 into 900, stacked up to 1400, 1800, moved down on 570, 1900 by 1000. And as you can see, not a lot of sellers now hitting into the bid at 28 even. 28 half seems to be holding. And we see a little bit of blinking at 28 half. With a refreshing bid. Nobody's hitting the offer yet. Nobody's lifting the offer, I should say, very heavily, but nobody's being very aggressive with the bid either. And now we're showing 500, 800 on the bid, 1200. Nobody hit it when it was 500. And we blasted through with 800. We're showing a little bid at 29, and we're refreshing. We're refreshing. If we end up taking this out with anything under, let's say, 1700, 1500, boom, 1200 hit into it. We refreshed. 800 hit into the bid, but it's not able to keep it. There's a real battle going on right here. Again, really fascinating. Highly encourage you guys to replay this battle that just goes on right in this range of prices. But as we can see, the sellers couldn't crack this level, and it does appear that we're starting to create a point of control at around 30 even. So that's an important thing to note, that the point of control is shifting up from 28 half 28 to 30 even. So point of control is shifting up. That's a sign that there is a lot of trading going on up there, and the pressure is looking like it's more to the upside of this particular two ranges, two micro ranges. But we're continuing to trade in this general area marked with the blue. Now, I'm just going to fast forward a bit again because I do want to try to keep the length of this video to a reasonable length. And that's interesting. Look at that. We've got 2,000 lifting the offer. 2,000 trying to lift the offer right here. And 500 traded into the bid. 2,600. 3,000 took out the offer finally. Now let's see if we're able to hold the 29 half. Let's see if we can hold the bid at 29 half. And we see nobody hitting into the bid. 11 hit into the bid. Clearly pressure is on the buyer side. And there we go. We took out the next offer with 800, and we're now trying to take out 30 half. And there we go. Now, this is something to watch for. We've got a large amount of volume that traded at 29 half to break through it. What we'd like to see is we'd like to see that hold when we go back to retest it. So if we move ahead a bit, there we go. We're back in this range. Let's see if we can hold 29 half. Nobody wants to sit on it. Nobody wants to put up an offer at 29 half and sit on it. Bid is stacking up. There's another important little battle that's playing out. Now we're showing a really weak bid. And nobody's really hitting into it aggressively. Now the bid is stacking up. There we go. Is it real though? Not a lot of volume hitting into the next one. There we go. We took that out. We're back to 28 half. Key area 28 half. And you can see how the bids can move away to suck sellers in. And just to remind again, the range is originally from there to here. So we're seeing price still trading within this range. And now we've exhausted the sellers and the buyers have taken over. We're pushing it back up. So we've got another buying wave going in to hit 31.5, trying to lift 31.5 and 111 even. Let's see how far this one gets. We exhausted the sellers. They only got as far as 28.5, 28 even. Just going to remove the markups and again fast forward a bit. Didn't make it very far with that buying wave. So we would have had quite a few attempt or opportunities to create an entry at 28.5, 28. Because the thing to keep in mind is if we end up cracking that level, the likelihood of us breaking through the low is quite high. But if we keep this level and don't break it, then the likelihood of us breaking the level above ends up becoming quite high, and of us moving higher beyond this level established right at the onset of this big move down, the probability of breaking that level is also very high. So if we hold this level and end up breaking this level, we definitely want to be long before we get to this level. If we are somewhat brave and have a strong constitution, we may look to actually get long at this level and risking it breaking, but we would look to get out at 27, 26 half for a very small loss. And then we probably wouldn't make another attempt unless we end up cracking this level. So again, our key areas that we're watching highlighted for you. We've just seen a buying wave up into the 31, 31 half area. That buying wave has subsided somewhat, seeing a little bit more balanced buying and selling. We may see another selling wave down into the 28 half, 28 level. So again, just keep these levels in mind. I'm going to fast forward a bit. This is actually interesting. We've got a battle playing out at these two prices. bid doesn't want to stack up. Fast forward again. Now, at this point, I'm going to let the action play out in real time. These are the areas we're watching. The big confirmation for us is if we break this level to the upside, we want to be getting long. That's our sign that our trade is very likely to work out in the direction that we had predicted, which is up. And again, from our original entry location here, we were hoping for the price to move up. So if we manage to get an entry anywhere below here, we're already looking way better than with the set and forget method. So again, we're spending a lot more time closer to this level with a lot more buy orders than we are closer to this level. That's another sign of pressure. Which one are we hugging for a longer period of time? Don't forget that all of the people who sold into the move down are now protecting this level. And if we crack this level, they're going to be on the wrong side and they're going to need to dump. So we would expect to see a flush all the way up to this 3 level. So if this does start to crack, we would need to be pretty quick to act. And so we'd probably be looking at jumping in on the offer rather than sitting on a bid to get into a long position. Now, again, as I said, there's a lot more that goes into this other than just observing where the price is spending more time closer to which level for determining pressure. There's a lot of edge to be developed in also looking at the behavior of bids and offers and trades that hit the bids or lift the offers, how much it takes to lift the offer, how much it takes hitting the bid to take it out. I didn't want to go into all of that in this video just because it's a lot of details. Almost every one of those things requires its own video. There's also a lot of really fantastic resources out there. There's Guy Bauer. He's got a fantastic course on learning to read the DOM um, as well as exercises that you can do to better learn to read the action. There's also John Grady, No BS Day Trading. He has a fantastic course worth every penny, and it covers reading the order book in great detail. Here we go. We're looking like we're really making a push to crack the 111 even. Here we go. We're showing a small bid and nobody wants to hit it. 600, 500, 1300 hit into it, and it's clearly a refreshing bid. But we're not seeing a lot of buyers lifting the offer. There's a little bit of a battle going on right now in this area. We had a refreshing offer. So we've got a refreshing offer and a refreshing bid. Now, if you're a buyer and you're looking to fill a order of, let's say, 50,000 contracts, you don't necessarily want to just smash through the level. You may want to have the sellers think that they can protect their position and sell a few more contracts to you. Also, if you are trying to fill a 50,000 contract order, you may actually end up trading to an upper size of maybe 60,000 or 70,000, and then you're looking to dump 20,000 right as we get into the 3 level, and then keep the remaining as a runner. That gives you some ammunition to protect your position when we get back down for a retest of 111 even. Heck, it could go as high as 100,000 contracts. So we can see we made an attempt, but we didn't have the pressure, the buying pressure, hitting the offers to crack the 111 even level. So as you can see, treasuries are quite slow, but they're easy to read compared to fast moving securities instruments. So we're testing it again. 900 traded into the offer. Offer is holding steady, showing a small bid. Not too many sellers hitting into the bid this time. $200. We cracked it, but couldn't hold it. Didn't stack up. Nobody wanted to take the offer. Nobody wanted to take 31.5 offer. There we go. taking 31.5 offer again and stacked up. Let's see if it's real. Not a lot of selling pressure. Really slow. You can see it slowed right down in terms of the volume, which can be a sign that we're about to break a level. All we need is a buyer to step in and really put the pedal to the metal. What we want to do is we want to determine if this is a real offer. So if somebody really needs to hit this offer with some volume, maybe 2,000, it may take as much as 3,000 to crack this level. And what we want to see then is we want to see 111 go bid and for the bid to stack up and for buyers to start hitting into 111.5. There we go. Weakening offer. 600. Nobody's hitting into it. Nobody's lifting it. Nobody wants to lift it. There we go. Oh, it didn't take much. And we did stack up. Let's see if we start lifting half. 111.5. There we go. 201. I mean, this would be the moment to either join the bid here for a long or actually start hitting into the offer. Though, if this thing really kicks off, you're 1,500 in the queue. It's not really gonna. There we go, 2,000, and it refreshed. That was maybe your one chance. 900. Oh, look at that. Quite a few chances to get long right here. The only thing that I don't like is that we're not seeing a lot of buying pressure. We're not seeing a lot of buy orders hit into 111.5. So if you want to be conservative, you could step aside and wait. But you can only wait so long at some point before the trade passes you by. Again, let's not forget our original would have been at 3, so anything better than 3 is good. And our risk was originally from 3 to 29. So anything less than that is a win. We could technically keep our stop at 27 even and try to get an entry at 111 previously. I think it's too late now. We've pretty much cracked it, and we're now trading in this range. So let's fast forward a little bit and see how this plays out, because I fully expect a retest of the 111 even area, and that would have been potentially another opportunity to get an entry. but it doesn't even look like it. You had one chance. That's it. Look at that. So in this video, we saw how we can use an order book to use as an active approach to entering a position in a zone that we are watching for a bounce in. The benefits of this approach is that we can wait for the market to show us what it wants to do before we jump on board, which means that if our zone that we highlighted ends up not being that place where the price bounces, we don't get taken out for a full loss anymore. And even if it doesn't bounce, we still don't get taken out for a full loss. Instead, we can just watch for the pressure and only jump on board when we clearly see that the market has picked its direction, or at least the potential of that being true is pretty high, as we saw earlier, and that the direction it has picked is the same that we want to get positioned in. So in conclusion, using the method and tools described in this video, you can pretty much reduce the number of losing trades you experience and start to hopefully see more money coming into your account than going into the market. If you have any questions about topics covered in this video or suggestions for topics for future videos, please leave a comment to this video or reach out to me on Twitter. The Twitter account name can be found in the channel description. Thanks for watching and for sticking with me all the way until the end. Finally, please help me reach and help more people by hitting the like button on this video. If you don't want to miss future videos, please subscribe right now and hit the bell icon for good measure. Happy hunting!